Our operating cash flow continues to be higher than the net income and stood at 135% of our net income. Our gross cash, including investments, was at $6.5 billion as of 31st December. In Q3, our net other income rose 15% sequentially. Accounting yield for the average investments held in India was at 7.2%. Our effective tax rate was at 23.9% for Q3/26 versus 24.4% same time last year. In terms of guidance, to reiterate what was stated by Srini, we expect our revenue from IT services business segment to be in the range of $2.635 billion to $2.688 billion. This translates to a sequential guidance of 0 to 2% in constant currency terms. Our guidance includes the incremental 2 months of revenue from the Harman DTS acquisition. It is impacted by fewer working days in Q4 and delay in ramp-ups in some of the large deals that we had won earlier this year. Lastly, I would like to share with you that in our recently concluded board meeting, the board of directors have declared an interim dividend of rupees 6 per share. With this, the cash distributed to our shareholders during the current financial year will be in excess of $1.3 billion. And we've been able to significantly exceed the minimum floor in our capital allocation policy for the block for the year ending FY 2026. With that, I'm going to hand this over to Nisha for Q&A.
Thank you, Aparna. We'll open the floor for your questions. For all the journalists outside of Bangalore who have joined us on Teams, please send us your questions on the chat. For journalists present in the room, please raise your hand and the microphone will come over to you. Please introduce yourself before you ask your question. Rishabh, do you want to go first?
Hi, Saurabh. Hi, Srini. Hi, Aparna. Happy New Year. So, you have increased your guidance better than earlier. You have increased your guidance and your revenue is better QQ and YOY. So what are you hearing from clients, and would FY27 be better than FY26? On the AI front, would you like to quantify as some of your peers have done? And if not, would you like to comment on whether AI revenue is better than your traditional IT work? Sort of for you, the restructuring that Aparna spoke of, if you would like to quantify the number. And Srini, the total TCV and large deals is low, has declined both sequentially and YOY. Are we seeing an impact from AI on that front? Thank you.
Thanks, Rishabh. Happy New Year to you as well. I was missing you last. Happy New Year to you as well, Rishabh. I was missing you last quarter. Were you hiking somewhere? Okay. So as far as the revenue is concerned, I talked about and Apan also talked about, specifically in Q3, we had a very secular growth across 3 of the 4 SMUs and 4 of the 5 sectors. That's data point number 1. Second, if you look at, I'll just talk about the bookings and then I'll go back to the what I'm seeing coming in, right? Clearly, if you look at the bookings, as far as the TCV is concerned, for Q3, we were at 3.3 billion. However, if you look at from a YTD perspective, we were around 13 billion, which is a 25% year on year. So from that perspective, I think, the trend of our pipeline continues. In fact, today, if you ask me, the pipeline is very strong. In fact, it's a combination of both large deals and smaller deals as well. And this is also, again, secular across the markets and across the industries. And if you look at the kind of pipeline that we have, I would classify one is clearly vendor consolidation continues from 2025 to 2026. Also, what I see is more and more of AI coming into the picture. And the way I think our clients are looking at AI is more about how do they want to reimagine their process or rewrite their applications. So a lot of companies are looking at how do we modernize their applications, and a lot of companies are looking at, how do I, relook at my entire customer experience, employee experience journeys, and how do I leverage AI to improve our productivity, experience, velocity, and of course, cost. So AI is becoming right and center. Every opportunity that we have in the pipeline, it's going to be AI first, be it run and operate, be it change and transform, or if it's any, of course, any AI-led projects, be it around advisory services to do with data, AI, security, or change management, or if you look at specific projects around modeling, data modeling, data curation, right? Specific projects to actually infuse AI to change a particular process and so on and so forth. So I think AI is going to be right and center. So there is no correlation between the bookings that you talked about, because it's a healthy trend that we had for this year, and AI continues to be right and center. I hope I covered all your questions, Rishabh.
Restructuring, Aparna called out, as technology evolves, you have to look at some obsolete skills, focused on two areas, one geography, one business. One was Europe, where we had taken, and second was Capco. We had done this exercise in this quarter to take actions against those people.
Hi, good evening, folks, and Happy New Year to all of you. I'm
Sorry,
Shrishti Acha
could
from
name,
Economic
please?
Times. Yeah, I'm Shrishti from Economic Times. So, building on Rishabh's question, so this is the second quarter where we have seen a sequential decline as far as the TCV is concerned. So, could you give us a sense of why that is happening, and also what your outlook is as far as client spending is concerned? Are they looking forward to making more spends or not, or what is the demand outlook looking for you? And also, secondly, how much, if you could give a sense of how much of the Harman acquisition was baked into the guidance, please.
So 1 and 3, I'll leave it to Aparna. Let me talk about the client spending, right? See, January is the time when most of our clients are doing the budgeting process, and we'll have a much better clarity in terms of the discretionary spend. Having said that, our clients are definitely looking to take cost outs through vendor consolidation and through, what I would say is bringing the efficiency and productivity through AI into their existing run and operate situations, and leverage that to do more and more of AI projects, whether it could be modernization of their code, or it could be anything to do with the data curation, and so on and so forth. So to me, from a demand outlook perspective, like I said, very strong pipeline that we have, and this pipeline is across sectors and across markets. So I don't see any change in that aspect. But discretionary spend is something we are closely watching.
Yeah, so Srishti, your first question was around the TCV decline. Like Srini spoke about it, year to date, our TCV bookings were $13 billion overall, which is growing well over 20% year on year. Our large deal bookings at $6.3 billion is also grown nearly like north of 50% year on year. So we've had very good to very strong quarters, and typically large deals tend to lump up, right? So if you look at our earlier quarters, large deals has always been in the range of $1 billion. And that's why you're kind of seeing this like a quarter-on-quarter decline. But if you had to really look at it year to date, which is perhaps the right way of looking at it, our performance is quite strong, and I would not read too much into the quarter performance.
Yeah. Just one more data point I wanted to add is, we had 4 mega deals in the first half of the year. Okay, that also shows the numbers in that context. So quarter one, we actually had a very strong momentum in mega deals, and followed by quarter two. Yeah.
So on your second question of around Harman revenues, right, saying for how much of it is a part, we've already called out that for 1 month we had 0.8% come in on Harman in Q3. For Q4, we've said that the entire Harman revenues is a part of the guidance. We're not calling it out separately. You can make your assumptions.
Okay, good evening. Wishing you a very happy new year. I'm Uma Kannan from Deccan Herald. Srini, you spoke about discretionary spending. I just want to understand, given geopolitical uncertainties in the US, so are these uncertainties still affecting your clients' decision making? first. And second, your sectors, apart from energy, manufacturing, and resources, all other sectors have performed well. And what is happening in this energy sector? And one more question. So this is regarding AI, AI skills that you spoke about. So going forward, will there be any change in your recruitment? Like, will you be looking at freshers with specialized AI skills? And what will be the package that you will be offering? Thank you.
So when you say uncertainties, what specific?
Geopolitical uncertainties.
So, Happy New Year to you as well. First and foremost, I think, geopolitics, trade and tariff, I think continues, right? And those are definitely uncertainties that continues to be there. And most of our clients, they are sensing and responding to the situation that's going on. Having said that, I think, more or less, I think the clients and the markets, if you look at, especially in the US, if you look at the kind of GDP growth that they had in 2025, which is 3.2%, and if you look at the stock markets, I think, they've steadied, and most of the cases, they've actually performed better. So that obviously reflects on the sentiments of the sectors that we work on and the clients that are part of that. So I wouldn't see geopolitics to be a big situation at this point in time, but the discretionary spend that I was talking to you about has definitely some of the correlation to that. Second, the technology disruption that's happening, the second point of your question on AI. So if you want to spend more on the technology, right, you also need to take cost out somewhere else. I think that's a balancing thing that our clients are trying to do. The more cost they can take out, the more they can actually invest into discretionary spend, especially specific AI projects. Yep, I think on the AI skills you want to talk, Saurabh?
Yeah, so from a recruitment standpoint, especially on campuses, what we have done is we have created these center of excellence, 50 of them across different universities, where we actually work with the university and build a curriculum in a specific area. Could be on AI, cybersecurity, data, and then make engineering, and then work with them and then hire people from there. I think that's the approach which we are taking. Premiums are paid to people who are with some experience, with client experience in that area. So that's how we are progressing on the AI skills. And then there's a lot of work happening in-house to upskill our existing talent in terms of certifications. So we are looking at different levels of certifications, and making sure that people are the workforce is equipped with the changing environment.
And if I were to give you a broader commentary about what's happening with the workforce of the future, right? There's a huge transformational need that's required for the current workforce that's there specifically in the IT industry, because you're going to be AI plus human kind of a situation, and there are new roles being created by AI. So the educational systems need to start evolving, because you need the talent that comes out of this education to be AI ready, AI first approach. So I think the universities need to train that. I think we are giving our own inputs, like Saurabh said, in terms of what kind of skill sets that you need to be in the new world that's coming up.
Avik, you can go next.
Yeah. Hi, Happy New Year to all three of you. First question to Srini. Can you talk a little more about the macro? Because the anticipation was that the second half of the fiscal would be better. So, when you bake about 0 to 2% in guidance, which is much better than what you